What is going on, everybody, and welcome to another weekly technical video where I go over all of the entries and exits that I am looking for the current week. If that sounds like something you're interested in, consider subscribing, as I do also provide a weekly analysis. It gives my insight to current events, earnings, my thoughts and theses for the upcoming week, and how should expect to apply your risk during that week. So check that video out as well. But before we get started, let's go ahead and drop a like and get this technical analysis video going. So as you can see, as of right now, we've broken the trend. Now, ultimately, what is really occurring here is over the past week, we've had a better than anticipated, if you want to say that, core CPI. I do advise that you check that video out because it goes into more detail of the sarcasm for that particular comment. But nonetheless, we've broken out of the technical, essentially this trend down. But ultimately, the market is feeling like there is a good chance that in the coming weeks that we will get a rate cut. But we do have Jackson Hole not this week, but next week. So that will play largely into what could potentially be going on here. So this week, I am expecting this to at least pull back and try to attempt to retest this trend line. Again, this is going to be very critical if for some reason this breakout dies and it breaks back below this 54 level or 5500 level is going to be a problem. But if we can retest successfully and start pushing back up to try to retest all-time highs going into an election, that will be important. September is normally a pretty bad month, so we'll see how this does play out. One thing I always suggest is the first reattempt that you start getting up here, you're going to get rejected pretty hard. So again, the market reaction is going to be extremely important when we try to reattempt to go back to this all-time high. But again, there is a lot of bond buybacks currently going on. There's a lot of liquidity being pumped into the system. So we'll see what happens here. There was a lot of worry and concern, but no news is good news. So at this point, we're going to do like we always do. And like I've always stated, is the market is designed to go up. So we did hit a newer low here. Question is can we get a higher high? So this attempt over the next couple of weeks is going to be extremely important. This week is going to be quiet. So with that being said, quiet to an extent. We don't know whatever headline news may be coming out, but ultimately, we want to try to reclaim this for the bulls. They want this to reclaim. We don't want this to be a higher low, and then this thing starts selling back off. So, in the much larger time frames, you can see that. Although we did break the trend on the daily, the big question is if you're looking this on the weekly, your high is here. You did make a lower low here, so this objectively needs to really pass the all-time high here again to be able to really start looking bullish again. And then again, you get a couple bad months coming up that typically do not aren't very fond of the bulls, so we'll have to see. And then weekly, as of right now, like I said, we'd like to retest this. This is why this level is so important. Looking at higher time frames, we are a higher high here still, but we'll have to see how this is going to play out on the monthly. You got a massive wick. Let's talk about manipulation again. This is essentially since we've paused, the market has essentially rallied since that point straight up, and massively so. And you can't tell me that's not manipulated because this was pandemic. This is your pandemic money injected in. Essentially, this was inflation rates going out of control, then starting to increase rates at a rapid pace. Essentially, this causes pullback, pauses there, and then the market's just going to be kind of rallying. So again, this is not normal. This is 40% of this is what 40% of the money supply looks like, and it's been even larger since then. But this is the dramatic moves you see because of so much money being injected in the system and then siphoning out. So you can only imagine what this pullback could look like. But again, we're going to have to see. It's one of the most anticipated ones. Again, tech had a really big hit back here in October 2022. So you have to keep that into account. So we'll see how much tech can actually pull back at this point. But that's what we're looking at for SPX. Again, there's not a big news event this week. We do have Powell on Friday that will be important going into Jackson Hole. So do keep that in mind. Let's take a quick look at Bitcoin. Now, Bitcoin, again, consolidating. The fact that, again, it's broken down to this second level isn't too exciting. I still think this thing could potentially hit 45 and 35. If we start getting a big market scare, I think we could potentially hit 35. But again, like I've talked about, I think it could be a very brief extent before this thing starts rocketing back up. Again, when I do these supply and demand zones, I don't like going too far out, at least like 2 zones outside. So typically like this is about as far as I can see a drop going. And then from that point, I think the market can rip back up. Now, this is extreme fear here to be able to hit this. But I think there could be a very brief extent to where it does hit down in the zone here around the 36K level. And then again, like I've always talked about, you have had this consolidation going on here. Now it's dipped down in the second one a little bit, but as long as it's consolidating with roughly within the 72 and the 52, it should be perfectly fine. But again, I think there's going to be a huge liquidation spike that's going to come down to this level and then potentially really rip this thing back up towards the back half of the year. Again, what you're looking for is panic from the Fed and rapid, large rate cuts occurring within a short span of time is when you're going to potentially see that a drop down here. And that's not saying it will, but typically when you're looking at technicals, the 2 zones below that is extreme fear. Fear could be roughly around the 45, so nothing too bad because we've been in rolling recessions. So that's really the question here. But you're also dealing with historically bad warning signals. So who knows how deep we could drive from that point as well. So these are things you have to understand. And over the past decade, as something I've been talking about, is they've been heavily manipulating the markets and not letting the markets self-correct. And when you do that, it works in the short term, but in the long term, you get bigger crashes from it when it actually does occur. So that's the problem. So we'll see here, but that's what I'm currently looking at here. And again, you need to break all-time highs up here at the 74 level. Will be important to watch and see what happens there. But again, coming months are going to be very important. I think once the election is done, once the debt ceiling comes back, that's going to force the hand. And then we'll have to see what occurs if nothing is broken by that point. And again, if nothing really breaks, I don't expect them to do too much moving forward. Now, bonds. There's been a lot of signs that people are expecting a huge move out of this. And again, in my opinion, I think we could at least potentially reclaim up to the 130, potentially even the 150. 180, I don't think we're going to see those levels in a very, very long time. You need some massive worry, concern, essentially almost a complete failure of the system, which we're kind of seeing as of right now because Warren Buffett owns a large amount of bonds at this point. So he can only buy so many bonds. Nobody wants these junk bonds. So that's the problem. So we're getting some potential wedge here that may be breaking out to the upside. Like I said, I think objectively, you're really kind of looking at is a 130 here for potentially the biggest move. Again, I don't know if we're going to get massive cuts back up to the 150, but again, much like 2 zones. Now there is some like speed bump zones here that you could potentially play. So you could at least get a bump up to the 113. Again, the bonds are going to play heavily into what the Fed's next move. So if they start rapidly cutting, this thing could skyrocket pretty quickly. But we have bottomed out here in October last year, roughly around the 82 mark, which I referenced quite a bit. But we'll see what happens there. It's good to keep your eyes out for those. Now, gold hit all-time high again. I was looking for this thing to try to come back and retest, but it is continuing to ride up as there's new fear there's no fear, especially the data that came out saying inflation is down. Again, I've talked about this. I suggest you check out the other video. Inflation is not down, but on a year-over-year basis, it looks like it's your new norm is roughly around the 3% and not a 2% window. So again, they try to mask that by altering reports and stuff to do that. But nonetheless, had massive consolidation here. So this move might actually be pretty big, considering you've had some over a couple months of consolidation and you finally get your breakout. So there might be a massive rip up here. Would expect this thing to, we've had some wicks that have come out and then been pushed back down, but you actually have a full candle break. So as long as this can hold roughly above the 226, maybe looking for a brief retest before a bigger, larger move, especially when we're starting to talk about big rate cuts. It could potentially happen that this thing rockets up from this point. So it'd be really key to watch this 227 level. See if the daily candle or the weekly candle does a brief touchback this week or next week and then rips up. Could be something to watch there. But yeah, you got a full body candle open and rip. So this one will be interesting to watch moving forward in the next couple of weeks. So Tesla, I'm really liking Tesla. I talked about this break up. This 213 level is critical for, or around 220 level is critical for Tesla this week. If we can reclaim the 220, this could be actual full break and retest, and then it could start really exploding back up. I think this thing is about ready to explode as long as the market sentiment can remain strong. Again, as long as that narrative is driven that the market is strong, this thing could rip. So we have to really watch and pay close attention. Again, I wouldn't be surprised if we could potentially start going sideways if, again, the market starts pricing in a recession. So that's something that's going to have to be watch very carefully here on what could potentially play, because you got to start thinking, once you're getting into these positions, how much further can it drop if we start pricing in a recession? And there's some that have already still been beaten down. Tesla is a good example of that. It's been beaten down quite a bit. Not saying that it can't go back down, because if it can't reclaim the 220, you're looking at this 200 level. If it breaks that, then you may be down here by the 165 is where I'm kind of thinking Tesla would drop if we start pricing in a recession and can't hold that 220 mark. And then again, it could even go lower than that. If it breaks the 166 mark, we could potentially start seeing, I think anytime you get outside of this trend line, you're going to have a very small window that it's going to float around this between the 160 and the potentially 100 mark. Again, you're talking about extreme fear, and I don't know if that's that the way they are playing this. I'm not really sure that's, unless it's almost a complete collapse of the system, which is a strong possibility, or at least threatening of that. But otherwise, technical wise, is if we can reclaim that, I think this thing could go even higher from this point. So, and then Tesla's got a great narrative with FSD and with humanoids too, which could potentially continue to fuel this thing back up, which may be the next narrative outside of just AI and driving everything. So I think that's why they have one of the best use cases alongside Palantir. That's also why I bring up Palantir a lot and why they've been doing so well. But we'll watch and see. There is kind of a trend line developing here. A new trend here that could potentially bend or break. So again, this area here is going to be extremely important. We want this above this overall massive trend line that we've broken out of over the past couple of years to potentially start rocketing back up. So really like this one. As long as it continues to chop here and doesn't break back down below, I think you're fine. Back below the 200. If it wants to chop here, that should be fine. But as long as it can break back up, if it can reclaim the 220 at any point, I think Tesla's really going to be in good shape. So that's what I'm kind of really watching there. Palantir, it's been in this massive channel upward. I thought we would have actually broke here. We had some good news, some bad news to break it here, but it bounced but it is remaining within this channel. So if Palantir can't break that 32 mark, it could be looking to come back down and retest the bottom channel. Again, this thing break out of this channel, continue to start ripping. It has the momentum to do that. It is a great company and very undervalued company, still even at 32. But again, we'll have to see what this looks like when we start looking at pricing in a recession, whenever that may be. So again, maybe the 20 mark, maybe the only is about as low as you're going to be able to get it from that point. But again, if it does break that trend, you could potentially see a 15. But we're talking about extreme fear, and you kind of trying to gauge where that might look like. So, but again, it's in a nice channel as of right now. Let's take a look at Celsius. Celsius has been one I played this little pump up, but as of right now, I was trying to look for a retest back up to the $50 mark. I'll have to see. This thing is massively sold off. I think this thing could do really well. I think the narrative is still there. It's still a very solid support zone here around that $38 mark. So we're really watching this. If it does break below that, you have a nice support here again at the 30 mark. But if it does turn back up, you got a pretty strong resistance here at the $50 mark. Hasn't really got enough momentum to get back up to the 50, because that first, like I've always stated, that first retest, you should get a hard rejection, at least potentially down to the 43 mark, and then it could start recovering from that point. But again, you haven't really priced in a recession. It's already taken a massive hit from this point, so we have to watch and see how that does play out. Let's take a look at NVIDIA. NVIDIA, massive rally back. So did hit the support here at the 90 mark and has been kind of just parabolic since. We'll see if it can reclaim, get back over. You want it back over the 135 solid body candle over that. That will allow you to at least break and retest solid body open for the weeklies. You're going to need a full week information, a full week of data to really kind of see if this thing is going to continue to go up. It has made a higher, this is still a higher low compared to previous. So it's still looking pretty solid as far as structure going up. But again, the next couple of weeks will be important to see how this does start to form out. But we'll see, because we're kind of hitting at this top point, especially on this weekly area right here at that 28 level, 128 level. You definitely want to break above that and hold that. So we'll see. We'll watch that this week and see what happens there. SoFi, I want to bring up SoFi. SoFi has been very choppy. And again, something I always bring up is, like, I like where this is at a very solid support here at the 666 mark. But again, you can see this potentially with the fear in the market. You could potentially see this down at 5. So you need to be aware of that. If you're doing a longer swing here, look for the possibility this thing could get down to below 5, potentially briefly. But again, I do really like the massive consolidation just in general around this level. It's been kind of bouncing around the zone for quite a while. And even when you look at back at October of 22, that was the worst part of it. You were at 424. So, and it's a very profitable company. So that's a big thing. I do want to have some sort of position in this, but I want to see how it does essentially the correction of the market and then go from that point. So we're going to have to see what happens with this one, but I do really like where we're currently at as of right now. And then let's look at our old BA. We'll look at BA. Again, massive rally. I don't know how the stock is at 170 with all the problems it's had, but again, it gives you a good gauge on where the market is. And so you're starting to see across all industries strength again because of what happened with Walmart, because of the core both falling in line, and then nothing hearing from the yen carry trade anymore. So you got like 3 major positives. And so now you're starting to see that represented in the charts. So again, for BA, that 200 is going to be an important level. Again, you've seen a lot of consolidation between that 200 in this 122 mark. So kind of watching that zone. I wouldn't be surprised if it gets back into this zone until we get any kind of recession news, and then that may dictate direction of this. But you definitely want this to hold the 164, and then you start talking about recessionary. Could potentially at least see the 120 mark, and again, the 101 mark is kind of, it's potentially like the bottom right there. I've played the 100 quite a bit on BA before, and it's done really well. So again, it's supported by the government. So to have it drop below 100, it's, in my opinion, isn't going to happen. I think the market in general would be in really bad shape if that did happen. Let's take a look at JPM. JPM, again, very solid coming into this week. Again, we'll see if we can break the 220. If JPM could break the 220, the market's going to continue to go up. Again, very parabolic moves. Again, these are heavily manipulated. When you see moves like this, these very overextended push-ups like that, either one, money's being injected some way, or there's some sort of prompting. Again, this is why people like trading banks, because they're very stable and it's very smooth going up, and it's not the volatility like you may see with a Tesla or an Nvidia. This is a difference between financials and a lot of growth, and this is why people like growth, because you can get massive upside where you get ones like this that are naturally progressive, that continue to push up and provide dividends and stuff like that. So we'll see what happens with JPM, but if it can reclaim this full body candle above this 216, start getting in that price discovery mode and start hitting new highs with JPM. Very much strong possibility when you're looking at this chart. But again, you've been very parabolic. So this is why I talk about putting risk on and knowing when to put risk on, risk off. You've already made a massive move up. If you can think this thing is going to continue to move up, which is a strong possibility as well, because you start talking about hyperinflation, stocks can just go parabolic. And so, but I wouldn't highly suggest just buying a position up here. If you haven't bought one of these other dips, like this last dip that was at the 200 level, or this potential dip here at the 177 level. That's why it's good to know the two zones below. So if it hits that zone, is you can buy in, because you never know, you may continue to rocket up. So I'm not saying don't buy, but you need to know. I would go heavier when we have massive selling like this. A little bit lighter on moves like this when you had a parabolic move up and you recovered about 50% of that almost. And then you get into positions like that, and then slowly add in that position like that, and then continue to add up. But again, realize that you are to put risk up when you've had this massive parabolic and no real retesting here. A small retest here is only about maybe 0.25% of the full move. But you would much rather have it at 75% down, and then look at position like around here, or the 160 would be a better. I feel a lot more comfortable and going a lot heavier at a 160 move than opposed to a 179, or even up here in this level. I may go heavy in this position, and then maybe only like 75%, 65% here, and then maybe only a 30% here, and then if it gets anything above here, maybe only a 10% on the pullbacks. But at that point, you start breaking above this, you kind of just start taking profits along the way, and then you kind of completely exit your position from there. So, and then just wait for a larger pullback, something like this to happen. Again, this is banks, so the banks don't move quite as dramatically as a lot of growth. That's why people like growth a lot more, because it has bigger moves. But so we'll see. That's kind of where we're at. I think to this point, we're really just waiting for more news. I think there's been some really good positions. I still really like Tesla. I like Palantir, but Palantir needs to pull back further. I think you're kind of at that point where you're getting too toppy on Palantir. Although it has the momentum to keep going, I think it's better just to be patient for a massive correction to occur before even thinking about a position there. SoFi, I think, is risky too as well. Even though I really like the position, I think you can, and I don't really like banks, but I think it could be potentially a good play there as well. So but we're going to have to wait and see where we go from here. So, with that being said, drop a like and thank you for watching, and I'll see you on the next one.